Hello everyone, how you doing today? My name is Kasim, welcome to my YouTube channel. I'd like to thank you for stopping by to hear me out and hear what I have to add to this YouTube community. And at the same time, just to add my own input, I trade a certain way and I want to share my way of trading with you. This this is what my trading setup looks like. And I think it's a great setup. But this is really complex and complicated. So I've decided to start a YouTube channel to break down this trading system. Although it's a little bit complicated, but this channel is to really explain how to use the system. I don't think anybody have this kind of system set up. Um, um, so I'm really excited about bringing this video to you. Okay. This is how I primarily trade. Is my trading station. This is Trading View, by the way. This Trading View. This is what my crazy trading station looks like. And my goal is to break this down, break this down into a very simple and easy to digest video. But before we get to that, let me take some things out of here so it's a little bit easier on the eye for you, because this is your first video and I don't want to bombard you with this kind of chart right now. So let me take out the volume, take out Ichimoku, and just leave this basic setup right now. Now, my goal is to explain this, and in explaining this, it could even take a couple of videos. So before I get to Ichimoku and using how to use it and using volume and all that to make trading decisions, this is my very basic setup. This is where I started. This is the bread and butter. For me, there's not too much going on here. This is a simple setup. This is the 200-day moving average. So each of this is comprised of the prices of the closing price of each of these candles. So these are called candles. So anytime this finish, it has a closing price, and when this closes, it also has a closing price. And each candle is 3 minutes. Each candle is 3 minutes. So every time each of this candle close, it has a closing price, and this 200 period moving average is a graphical indication of what's going on in price compared to what it has been in the past, right? Because the price right now is different from what it has been at this point, although it's gone down a bit. So this is what I use. This is a 200-day moving average. People call it 2 period. This is a 20. No, I'm sorry. This is a 200-day. This is a 200-day. I'm sorry. I'm still new to YouTube, and it's very difficult talking to yourself to a microphone. So please bear with me. So this is my setup. This is the very basic setup. But before we even get to this, let me just take you back to the website that I use. This is TradingView. I think it's a great website to use because it's a website that caters to an international audience, broad markets that you can be involved in. Like I always say, there's stock market, crypto market, bond market. There's different markets in the financial world, and if you can choose one that you want to participate in and actually learn everything about that particular one, it would actually be great for you, and you can slowly but surely improve your financial well-being. Well, for this particular channel, for this particular video today, I want to show how I got this, how I got to this point, how I got here, right? But before I start, we start here. So you go to tradingview.com and it will bring you this website. I'm using the paid version because I'm doing YouTube videos. If I'm not using the paid version, I'll have a whole bunch of ad everywhere, and I don't want to disturb you with ads. The other point I want to make is please do bear with me with the quality of the videos or the editing or anything like that. Like I said, I'm still really new to YouTube. I'm learning, I'm producing as I go, and I think it's also um, a great lesson, maybe a great inspiration for anybody else that want to being in that want to be in the YouTube community. I'm gonna just document my progress with trading with my YouTube on YouTube, so people can see the process of what it takes to get a big channel eventually. So when you go to tradingview.com, this is the website that you see, and to sign up, you don't have to pay for this. You just sign. Yeah, they have a basic service, and you just sign up with your email, and then once you sign up, you can go to chart, and when you go to chart, you're gonna get something that looks like this. Now let me do something here. Give me a second. Let me take away all of those, and when you initially click on chart right here. No, actually, give me a second. Once you click on this chart on YouTube, once you click on chart, it would bring you here, right? This is Apple stock, and this is what the basic chart looks like. This is just candlesticks. It's called candlestick. It's called candle. Um, I do not like trading with this. This is a horrible, horrible chart to use. A lot of people use it use it to trade. I think it's a horrible chart. I don't like to use this. As you can see, this is my tools. This is the tools that I trade with, and this is the chart that I like to use. It's a Japanese chart. It's called Heikin-Ashi, and you can see the difference right now. This is the difference, right? When you're trading, you wanna erase all the noise, right? Just like with every other markets in the world, there's a lot of noise that go on in the background of these things. So you want to eliminate all the noise in the background, and you want to see what's going on with the chart, right? And I believe this setup that I'm going to show you today really makes charting easy, right? It makes it easy. It makes technical analysis fun, for me anyways. That's why I'm bringing you this video, because I think this is fun and interesting, and a great way to actually start learning a new skill that can actually make you great money in the future. Well, let's get into it. This is the Heikin-Ashi chart. It's a Japanese style chart. The Japanese invent this. Funny enough, I also use Ichimoku, and Ichimoku is also a Japanese invention. So I guess the Japanese are great chartists. So let's get into this video. So right here, this chart basically do not tell me much. I mean, yeah, you can see some trend. You can see, double bottom here. You see resistance here at this point. Okay, so let's do a little support and resistance. You see right here, right? Let's see. You can see some, little patterns here that you can trade. It broke this, you could trade this. If you buy here and it came back down, you just wait. As long as it don't go past, obviously you want to have a stop loss, but as long as it don't go keep going down, then you can just wait and see what happens, because right here becomes another support, right? So you see it broke up, right? This is why I like to use Heikin-Ashi, because it's easy to use. But even at that, just looking at this chart, it's still very plain, right? It's still very plain. So that's why my main indicator that I'm going to add to this is the 200-day moving average. The 200-day moving average. And to get to it, the one that I use on TradingView, to get to it, you have to go to indicators and you go to public library and you click on this one right here, this one, CM Ultimate MA. I think it's a great tool. The person that created this did a great job. So thank you, whoever you are, if you're watching this video. This one right here, CM Ultimate MA. Double tap it twice, double tap it twice, and it will bring up something that looks like this, right? What I personally like to do, I like to use two of them. I like to use the 200 period moving average and then use the 20 moving average. And I'll get to the reason why I like to use it in a moment. So let's click on here. Once you click on it, you want to go to inputs and change this 20 to 200, right? Because we use two of them. You see it moved out right away. Go to the rightful position, and you can change this into any color you want. I like to use green and make the lines thicker, and red, make it a little bit more pronounced, and at the same time make the red a little bit more thicker. And that's how you change the 200 moving average. And you will do the same thing too for the 20. So for the 20, you just leave it like this, you don't change it. That's the 20-day moving average. Style, same thing. I just like to just change this. You don't have to do it, but you know, it's up to you. You can use any color that you want. I personally like to use, okay, the second one I use right here. Okay, let me just change this green to a more easier on the eye green. Okay, so this is my basic setup. I think with this kind of setup, you can trade any markets successfully, right? This is the very basic setup. Give me a second here though. Let me just take those out because that was for explaining how to set that up. Just give me a second here. Take those out. Okay, so let's put, this is my one, the one that I have set up before. Let's put it 200 back, and let's put it 20 back. So now I just have two more chart tools that I use to explain to you. So I use a total of 4 tools to trade with. I don't use MACD or you know, RSI or anything like that. Because I think this is just better. This is what I have set up here is just a little bit more superior to all of those. Now, what's going on here? Let me explain this. This Heikin-Ashi, it's great when you use it in a slower time frame. That's why I like to use the 3 minutes time frame, right? I use the 3 minute time frame because it's great to use it in 3 minutes. Because when you trade a market, there's a lot of noise in the market, like I said earlier. There is a lot of noise in the market, and if you don't slow things down, you could end up losing a lot of money or being whipsawed out of a trade, of which I've experienced all, right? It's trial and error and losing a lot of money. I can't even get to how much money I've lost in the process of getting to this video, but it comes with the territory. It comes with learning how to trade. One thing that is guaranteed when you're trading stock is you're bound to lose. You're going to lose some money at some point. That's almost 100% guaranteed. At some point, you're gonna lose money, right? So if you're not comfortable or you don't want to lose any money, don't learn this skill. This is a skill for some people that are comfortable with losing money, that know how to stay calm under pressure and all that stuff. So okay, let's get into the chart. How do I use this chart? Because I guess that would be the main question. How do I use this chart, right? Of course, the whole point of trading is you want to make money, right? And you only make money when you buy something at a low price and you sell it at a high price, right? The way that I particularly use this chart, you know what, let me just focus on the 4th here. Let me focus from the 4th here, 4th of December. So the way that I use this chart is, so let's say the market opens, right? The market opens, boom. You see what happened when the market opens? It shot up a little bit. Shot up, huge power candle right here. It's a huge one. And then what happened is it came down a bit, then trying to push up. I personally, what this is telling me is when the 20-day, this is the 20 moving period. This is the 20-day moving average. This is the 20 period moving average. Some people call it 20 period, or some people call it 20-day. So please bear with me. I'm still trying to figure out which one is my word that I can use for YouTube. That will be a lot easier on the mind as well. Anyways, so this is the 20 period moving average right here. It's closer to the chart, and that's why I like to use this, because it helps with entries and also exits, right? So what I like to do with this chart is when the current price, right? Because each of these candles are 3 minutes and they technically the current price, right? When the current price is above the 200 period moving average, right? So when the current price goes above it and the 20 crosses, at this point, crosses the 200, right? You're only going to look for opportunities to buy the stock. That means you go long, right? So we got that straight. You're only going to look for opportunities to buy at this point. Buy here, possibly buy here, and possibly buy here, and look to sell out at this point, right? Because if you're swing trading, but if you're day trading, you might want to just buy here, exit here. You take a little profit, and then look to buy here again and probably exit out here. That's a little profit as well. So there's a couple of trades here in 2 or 3 days. So entries. So first of all, when prices are above the 200 period, you usually want to go long, and when prices are below the 200 period, you usually want to go short. Now you see situations like this. If you go short, you end up losing money because price turned and then it started going back up. Now entering a trade here is a little bit risky because it's still below the 200 moving average, although the 20 is indicating with this green bar, with this green highlight, is indicating that potentially the stock is gonna go back up. It's gonna go back up, right? So like I said, this is the basic chart. That's the basic chart. This is how I trade. This is how I trade right here. As you can see, the 200 here. You can see the 20, Ichimoku, and Heikin-Ashi right here. This is how I trade. That's what I'm showing you right now. Is just the basic chart, right? So what we have here, we have the 200 period moving average, we have the 20 period moving average, and we have Heikin-Ashi chart, right? So that is what we basically have here. And entries, these are entries right here. In order to enter using this system, you only want to enter the trade when prices are close to the 20 period moving average. You do not want to enter a trade here. Actually, no, this is a different scenario because this is a short side. Okay, this is what I'm saying. You do not want to enter a trade here because prices are far. Prices are far from, you know what, give me a second here. Let me use this dot. So prices are far. Price right here, right? If the price was currently here, it's still far from the 20 period moving average. So you do not want to enter there. You only want to enter when prices are close to the 200 period moving average. I mean, close to the 20 period moving average, sorry. That's the only time you want to enter because when prices are far from the moving average, when prices are far, it could end up just going down because when trading you really don't know what's gonna happen next. The best thing to do is if you don't know what's gonna happen next when you're trading, the best thing to do is would be to use tools that can kind of pierce into the market a little bit so you can get at least like a 70-80% chance, 80% probability of winning on any particular trade because you're as a trader you're only as good as the tools that you use in order for you to be able to trade because different tools tell you different stories in the stock market. So this is another section right here. I thought let me use another example. So this chart was from the 25th of November right here. And then you see what happened. What happened? Boom, when the market opened. And this is Apple stock, by the way. This is Apple stock. See when the market opens, boom, it shot up, we got a strong candle. If you want to take I mean, you can always enter here too, but it's still risky because what could happen is prices could just straight move down, right? And straight up move down really fast, right? So me personally, I I'm not comfortable entering a trade at this point because it's far from the 20 period. I like to enter trades when they're really close to the 20 period. So point like this, when people are selling, that's when I want to buy because people are selling at this point. And at this point, people are buying aggressively. People are buying aggressively at this point. So when it gets here, you see people started selling. So for me, this is a buying opportunity because I know prices in the future would potentially go up. And why do I know prices in the future would potentially go up? Because of the 200-day moving average. Prices are currently above the 200-day moving average. So to me, at this point, if I entered here, anytime here, I bought a call because I primarily trade options, stock and option. So if you buy a call here, potentially prices are going to go up in the future because it's above the 200-day moving average, and and prices are close to the 20-day moving average. So you can enter here. It goes down a little bit, but it really don't matter because prices are above, right? For me, this is how I trade. Prices are above the 200, and then guess what happened? In less than 2 hours, in less than 2 hours, prices reverse, and you see what happened here. Boom. So for me, first entry will be here, second entry will be here, and I'm possibly looking to get out of all the trades at this point. Because when you see a huge red candle after all this green candles, is a strong signal that people are selling. Well, the other tool that I use is to use the volume, right? So let's unleash the volume. So this is what the volume looks like. So yeah, at this point, as you can see, looking at the volume here, you can see that people are, after we've had some solid buying, right? So at this point, people are basically selling. So depending on your comfort level and what your trades parameters are, money management, risk management. If you don't know what that is, I'm still going to do a video about that in the future. Um, so depending on your risk management, risk tolerance, I mean, depending on your risk tolerance, you can decide where you would wanna get out at this point. But for me, if I got in here, so this would be an entry for me because prices are close to the 20-day moving average. That would be one entry. This would be another entry for me, and I will be completely getting out of the trade at this point. So that is the call. That's the call side, and as you can see, the volume the volume kind of gives you a visual graph of what's going on. And if you see like two consecutive red after you've had a slew of green candles, right? And you see two consecutive red, I will probably get out of the trade just to be safe. I mean, it all depends on your position size as well. So so yeah, that is how. Okay, you know what? Let me explain. Let me just use um this opportunity to explain if you are going short as well. Let me take out this. Let me take this out. So again, I want it to be easier on the eye for you guys, right? So if you're going short, right? If you're going short, and that means when you're going short, that means the market is going down, and you don't want to buy uh, a call. You don't want to buy. You don't want to put money that the market is going up when it's going down. You always want to follow the trend. Trading is all about what's going on right now. What's the trend, and you want to follow the trend because, quite frankly, your retail trader does not have the means to be able to go against, the hedge funds and the people that can just put $1 billion into Apple in one day, or a couple $1 million into Apple in one day. So let's say we start here. This is the 20th of November. Yep, 20th of November 2019. So as you can see, when the market opened, price is just right away. Right away, we look at the current position of the price. What are prices currently doing right now compared to the 200 period moving average, compared to the 200? Because remember, when prices are above the 20 period, we're only looking to buy the green parts, which is to buy calls. And when prices are below, we're looking to buy puts, which is the other word is going long. If you're trading forex, going long, or at this point you are going short. But the main thing is we're looking at the 200 moving average, prices above it or below it. So now that we know, okay, prices are currently below it, right? So if I were to look at this on the 20th when the market opened, I see, okay, previously from the previous day, prices have already broken the major point for me, which is this point, right? So it's telling me that, okay, most likely this Apple is going down for the in price, right? How do I take advantage of this in order for me to make money, right? So the way that you take advantage of this is you would look at, okay, when the market opened, it had a huge strong sell, then come with another one right here, and this wick right here, this small wick in the middle, is showing that price might change. But this system that I use here is great because it keeps you in the trade longer because of this moving average. And when prices change, the color also change. So it gives you an indication of what's currently going on um with current price, and the trend, right? Because right here, because remember, trading is all about trend. Which direction is the stock going in right now? And you want to be with the general trend. If you go against the trend, you're going to lose money. That's 100%. You don't want to hope, you don't want to pray when you're trading. You do not want to hope and pray. You want to know, okay, this is what's going on. This is where I need to put my money. This is where I need to have my money. And this is exactly what I need to be doing. Let's say, for example, right, if you want to enter and on this day, what I would do is I would wait a little bit to see what price does. If you enter at any of this point, it's still a little bit risky because um price can change, right? It can just keep on going up and it breaks this and it just shoot up, right? Price can change. But what I like to do is I would, when the market open, I don't enter right away. I like when price hugs the 20-day moving period. When it gets to a situation like this, I'm a buyer at this point because I know prices have no choice but to go down at this point. And then guess what it did? Boom, it went down, came back up. At this point again, I'm buying again at this point because I know prices are going to go down. And then boom. The only time I sell is when trend. That's why I love this moving average. That's why I love this CM moving average. The person that created this moving average is literally a genius. Um, I love this because it changes color and it shows you change in trend, right? So for me, this is a signal to sell, right? Because let's say if you got in, let me use a forecaster arrow here. Give me a second. Okay. So let's say you got in at this point and you got out here, right? As you can see, this is showing negative $3. That means this move right here would have been a $3 move. So let's say if you put in $1,000, you would have made, maybe $300 on that trade, right? Because um this is a great trade. Almost is 1.9%. It's basically 1% trade. Very, 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 very low risk trade right here. That's why I like this trading system. I really, really like using this system because it tells you what's going on. It tells you what's going on in the market, right? And you can use this for different things. So let me go to Euro USD for all the Forex people out there, because I know there's a lot of Forex people out there as well. So let's see what's going on here. No, actually, no, this is not a good chart. Euro USD. I think I want to use this one. Okay. So the same thing with Forex. And as you know, with Forex, price move really, really fast with Forex. So this is why a system like this is absolutely important. And when trading Forex, I have a strict rules about trading Forex. The strict rules are if you don't get in with trends like at places like this, right? If you don't get in at points like this, okay. So with Forex, because prices move really, really fast, I try to make sure I get in at a point that it's absolutely crucial because price moves so fast. Like, okay, so from this point is 1, 2, 3, 4, 5, 6, 7, right? So within a 7 or 8 hour period, the trend is obviously changing right here. right? Actually change here. But if you're trading Forex, this is a great tool to use as well, because you're looking at bigger um bigger support and resistant lines, right? So you can have a clear picture of what is going on in the Forex market, right? And it gives you a great idea of, okay, what's actually going on in the market, what's actually going on. And as you can see, when the 20 crosses um the 200, I'm going to be saying this a lot. I'm going to be drilling this into everybody that watch my video. When prices are below the 200, you want to short, right? And you only want to enter when prices get close. When price gets close to the 20, that's when you want to enter the trade. So this is Euro USD. So let's say right here prices get close, you can enter here. That's the first trade. Another trade can be somewhere like here or somewhere like here if you want. This is another entry. It all depending on where where you open the stock or commodity or anything. Um yeah, I hope you have enjoyed this video so far. I know it's really long, and the point of this video is just take my time, explain these things, and just trying to help the trading community in a way that it's easy for everybody. Let me go back to Apple. Let me go back to Apple. So in recapping, the two main moving average that I use is let me close this for a second. The two main moving average that I use is the 200 period moving average, the 20 period moving average, and the one that I use is when you go to indicator right here, you go to public library, you're going to see this right here, CM Ultimate. This is a great one, and you can go into it and change the settings. Let's click here. You can go into it. You would normally change this to 200. You can change the colors, change the settings. I only would touch here. This one will be highlighted. I just untick them to have less drama on the chart. But this is the only thing that I change here. I change the colors, and then I change this to 200. And then right here too, you have the 20. This is the 20 period moving average, and same thing, I just change the color. So that's the two moving averages that I use, right? The other point that I want to make is entries, right? When do I enter? When do I exit? Entries, when you're buying calls, when you're going long, entries would be positions like this. You want to enter here. If it goes up and it goes down, if it goes down a little bit, don't worry, because the chart, this moving average is still far, right? The prices are still far from the 200, so most likely it's going to keep pushing up, right? So that's why I like to use this system, because it's really easy to use. So let's say you entered here and the price went up, came back down a little bit. I wouldn't worry about this, like I said, because prices are still far from the 200-day moving period. And then price went up, came back down, went up, came back down, and the next day we had a huge shot up again. And then prices just kept on going up. But what kept us in the trade all the while? This right here. As you can see right here, that means there's a clear change of trend in the moving average. Because this is 200 period. You see? It's a little bit slow, it's a lagging, I'm sorry. It's a lagging trend. But it's also a great trend, right? Because you can clearly see that you are right to enter here, and possibly it will be a good entry here again. And next couple of days, Apple just basically went up. This line keeps you in the trade longer, keeps you in the trade for a long period of time. So that's that. So there are some basic rules that I like to follow when I trade using this particular chart. Um, the first is um, trade with the 20 MA, right? So let's look at the 20 MA. The 20 MA right here, as you can see, prices, when prices get close to it, you want to enter a trade here, right? So you want to enter a trade when prices get close to the 20 MA, right? And at the same time, when prices are above the 200-day moving average, that's when you want to go long. When prices are below the 200-day moving average, you want to short, right? And what you could do, let's say for example, right, you were watching this particular situation here, and on November 19th, you see, okay, price came down, clearly broke, it's now below. What you could do is you could say, okay, you know what, I'm gonna enter a short here, and when prices goes up, you wait, you enter the short, you wait, and you see because it's still below, your waiting definitely paid off for you the next day, right? That's why I like to use this chart. So you see there's a clear move here that you can make money on, and then there's a huge move here that you can make money on, and the general trend just changed at this point, right? So when prices are above the when prices are above the 200 period, you wanna go long. When prices are below, you wanna go short. And like I said, all entries has to be close to the 20 period. All entries has to be close to the 20 period because that is the best um that's the best entry. Now, if you want to be a little bit more um if you want to be a little bit more specific about the exact entry, if you want to zoom in a little bit here, because we're looking at this as a day trader. So right here we have the 5th of December, right? Let's say price came up strong, right? Came up strong obviously, and then we let it do its thing for the first couple of minutes, because remember, we don't enter when prices are in a situation like this. This is not a good entry for us. So what happened? Price came down. We still watch to see what's going on. At this point right here, you do not hesitate. You don't think. You don't get scared. You just enter. Enter the trade at this point. Enter the trade. This is your first trade of the day. Looking at this. This is from a day trader's perspective. This is from a day trader. As you can see, we have the 5th here and we have the 6th, right? So at this point would be a good entry for the day. And at this point as well will be a good entry for the day, and you're getting out somewhere here before the market close, right? And as you can see, let's do a forecast here. So let's say you entered here. Actually, this is not what I wanted to use. Pardon me. Oh, this is horrible. Okay, give me a second here. This is a tool that I wanted to use. So let's say at this point you entered here and you got out here, right? This is a $2 trade on the day. So if you bought like 10 contracts or 5 contracts or anything like that, you're sitting pretty with a $2 trade, right? So this is how I look at it from a day trading perspective. If we zoom out, you can also look at it from a swing trade perspective, right? If you wanna buy and you wanna buy and hold. So buy today, sell like maybe a week or 2 days later. That's swing trading. Day trading is when you buy a stock and you sell today. You buy today, you sell today. Swing trading is you buy today, you sell tomorrow, you sell 2 days after, 3 days after. So the one that I just explained is for day traders. This for swing trades. So if I was looking to swing trade Apple, Um, I wouldn't be, because I like to just follow what the chart is saying. So at this point, I would have probably gotten in here, and then prices would come down. I would still hold it because it's still, prices are still above the 200 day, and then next day it came up, came back down. I would get in here again, get in here again, and just wait to see what happens. Because once this holds up and this holds up, the 200 day and the 20 day, once those hold up, this is great for you to just use to basically, this CM ultimate moving average keeps you in the trade for longer. It's like a cleaner version of Ichimoku, right? It's like this is what I use, but it's a cleaner version of this Ichimoku right here. So I don't want to confuse you guys yet. But yeah, this is the tool that I use. So let me get into the other things that I wanna talk about here. So let's look at the other things that you might need. Like I said, for me, I trade using the 3 minute period. You can trade with the 5 minutes. You can trade using the 5 minute chart. I don't know why it's not changing. I don't know why it's not changing. A little fluke there. I don't know what's going on with this chart. Well, you can change using you can trade using 5 minutes. You can trade using 1 minute. I don't recommend use the 1 minute chart because Heikin-Ashi, this candle is better is better when you slow down the time frame. That's when I like to use this candle. Okay, I think that's pretty much it with this video. Um, the other thing I would like to introduce you to, I have set up an Instagram channel for this YouTube page, and it's Trade Like Bada. And what I'm doing with the page is I'm posting every single day about my trades. I'm gonna be fully transparent. I will post when I lose money like here, and I will post when I make money like with all this stuff. So please follow me. This is a brand new page as well. Just with my YouTube, I only have a few followers here. So please follow me. If you like this content, if you like this type of videos, please leave a description. Please leave a comment in the description, and follow my IG because I'm trying to grow the channel. And if you want to see how I'm doing, how I use what I'm explaining to you on YouTube, because you don't want to just listen to people on YouTube. You want to be able to see what they're doing. And if you want to see how I'm doing, you can follow my IG, and I post that pretty much daily. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. My goal for this YouTube channel is to really bring trading to your everyday regular people. Simplify trading and just make it as easy as possible. And at the same time, I'm also going to be bringing a lot of my investment philosophies, how I like to invest. I do invest for long term as well. I primarily day trade for an income, and I still have a job right now, and hopefully my goal is to replace my job's income with my full-time trading income. So I'm just on this YouTube sharing my story, sharing my wins and losses, sharing everything, and hopefully it will be a great inspiration for you to go out there and use these tools and be able to make money for yourself as well. And as we all know, with financial channels, I have to give you a disclaimer. I'm not a financial professional. I do not I'm not a financial professional. Please do not take this as financial advice. This is for educational purposes only. I'm only here to educate you on how I'm trading, how this system works for me. Please do more research. Do your own research so you can make decision based on your own analysis as well. So yeah, like this video, subscribe to this channel, and I will see you next time. Have a good one. Bye.